So as you talked about at the beginning, it's not just about IPOs, but if companies here at some point, now probably, but probably in the future, are thinking about going, public or considering that, what kinds of advice would you have for those types of folks? And then can you also talk about some of the kind of private market offerings you have?
Right. So, there's just a couple observations. One is companies are staying private a hell of a lot longer, right? So the average age of an IPO year to date for 2015 is 13 and a half years. So some of these guys that want their money back 13 and a half years later, that's a long time. And there's some observations, and part of that is just the market, and other of that is regulation, right? So you had the Jobs Act, and Jobs Act came out a few years ago, and one of the provisions was that it increased the shareholder count from 500 to 2,000, not including employees, which basically means that they could remain private for a hell of a lot longer as well. So we saw this as an opportunity to see what we could do to support the private market space. So we are working with literally companies that are two individuals in a garage all the way up to potential an IPO. So that's why we're in the business, and there were markets out there like Second Market and Shares Post that were providing a platform for private transactions. So you have employee 3, 4, and 5 that want to get some liquidity. I work at Facebook. I've been here for a while. I need to send my daughter to college, and they're literally going to a Starbucks with their friend and say, hey, listen, you want to buy these shares off of me? And then they get transacted over Second Market. So private transactions have gone on, and they will continue to go on. But what we felt was that there weren't sanctions and there weren't good controls. The companies didn't have good controls over those private transactions. There is what we call an asymmetric market. So the employee had incredible amount of information about what was really going on in the company, and you had this buyer coming in off the street that was unknown to the company and doing that transaction. So what we provide is a platform for companies to control 100% their private transactions. So for early employees, they can go to the employees and say, hey, listen, if you've been here for more than 5 years and you have vested shares, raise your hand. Okay, all of you, we're going to say and allow you to sell 5%, 10%, 15% of your shares, and you're going to do it at this price, this valuation, based off of a number of different calculations and so forth. And these programs would maybe run once a year, twice a year. We have companies like Pinterest, DocuSign, Tango that are all doing this. And really, from the company's perspective, they're doing this. I just moved back from Silicon Valley. I was out there for 3 years, and the number one issue that every company and most VCs are facing is retention and recruitment. So they're seeing this as a retention/recruiting tool. Wow, I could actually go to my employees and say, hey, listen, we've actually partnered with NASDAQ and to provide some what we call a relief valve, if you will, on their holdings.
So I got to ask a follow-up question now that you've just come over from, the Valley and this mythical place, right? So what's going on out there with these crazy fundings? How many unicorns are there? 75? Winter is coming, says Bull Gurley, right? I mean, so what's going to happen?
Yeah, so certainly it's crazy out there. It's euphoria. It is definitely an interesting, dynamic landscape for both from the innovation side, coming from these companies, but also from the funding side. So it is exciting. I read an article last night. 115 unicorns now. So I think that's globally. So certainly, not every single one of them is going to have an IPO exit, in the near future. So again, that's why we believe, that a private market is important for them.
Yeah. I actually would throw that out to anybody else. I'm sure McCall has a perspective on that. But what is right now there is a bit of frothiness, let's say. Just some perspective on that, just so people kind of have some context from a venture capitalist or an entrepreneur's perspective on what's going on with these kind of ever-increasing valuations and all these unicorns and how it'll work out.
Yeah. I mean, we jokingly talk about dead unicorns walking. People refer to them as private IPOs. And what's funny about it is it's just the opposite. No one's getting liquidity, right? They're wearing these war chests, but they're pricing them at a premium to where they'd go public, which is almost guaranteeing they can't go public, right? It's really crazy right now. And the way that the market it's the same every single time. The tech market doesn't do it on its own. We saw it this week, right? China has a burp, Russia, something macro happens, the markets pull back, the fear starts to creep back in, and suddenly everyone gets very anxious in the valley. They all have a partner meeting on the same day, on a Monday, and literally by Tuesday, no checks are being written. I did a blog post in like June 10th, 2008. And it was the second quarter, it was being announced, second quarter that no IPOs, venture-backed IPOs had gone out. First time in the history of venture. That next Monday, all the term sheets disappeared from Chicago. Literally, every single term sheet vaporized. So I called my friends up in the valley and I said, what the hell's going on? And they said, basically, the senior partner said, go on vacation for the rest of the summer. And so I just wrote a blog post, said, cycle's over, get ready. Not that I'm a prognosticator.
So when are you writing the next blog post?
So,
You've got it teed up, don't you?
So all I know is people, who knows when it's going to hit, but if everyone's watching for it, it probably doesn't hit. Two is everyone's really nervous. So remember when the New York Stock Exchange, I was actually at Second Market's office when the New York Stock Exchange computers went down.
Right.
I'm looking up at the screen, trading screen, I'm going, that's not good. And suddenly all the commentators are talking about Armageddon's hitting. You had the Today Show people talking about how they were all going to cash for 8 minutes, like to the general public. And I'm like, oh my God, America is terrified right now. And so all it's going to take is something like that to hit, and you'll get a downdraft. I don't think we get out of 2016 without some kind of correction. I don't think it'll be Armageddon, but but you'll slowly see. What'll happen is these unicorns won't die, but it's going to take them 10 years to earn back their valuation.
That makes sense.